Welcome to the Well Off Podcast, where the goal is to motivate, inspire, and share success principles. I'm your host, George Almasri. On this episode, I interviewed Adriana Ostapenko. I hope I said that right. But we had a good time chatting about her journey as a real estate investor. She actually started off wanting to become a pastor before real estate, and then eventually changed her mind, and she started investing in some small multi-unit conversions in Hamilton. And lately she's been working on projects in New Brunswick. So we talked about a 50-unit property that she bought. She added 2 units there. She was able to turn over every single unit in the building and refinance it within 2 years. So that was a really cool journey. She explained what she was able to do there, how she was able to turn over so many units, how she was able to raise capital for that property. So if you guys are interested in that kind of content, limited partnerships, general partnerships, raising capital, all these things, then this is a great episode for you. If you do like the content, then make sure to leave us a review, especially on the Apple podcast platform. So anyone listening on an iPhone or on a Mac or any Apple product, I'd be greatly appreciated if you can leave us a review. And finally, if you want to download some reports, we've got a bunch of free stuff for you to download, including multi-unit renovation guides, things like that. So you can go to www.welloff.ca/podcast to get a whole bunch of free stuff. There you go. Enjoy the episode. All right. I'm here with Adriana. It's the first time we meet. Thank you for coming by. I'd like to start off by finding out a little bit about you. So tell me about where you grew up and a few things you remember.
Yeah, it's so nice to meet you. It was a nice surprise to come in and get to know each other. So my name's Adriana Ostapenko. I have 2 kids I was sharing with George, 9 and 8, or 9 and 10. I've been a real estate investor for the last 8 years. We started with smaller multifamily homes in Ontario, mostly Hamilton area, and eventually grew into apartment buildings and development. So this is what I do full time. I'm also a raising capital coach. I've raised a lot of capital for all of our deals and projects. And yeah.
Tell me about being a pastor.
I saw your interest when I mentioned that, so I knew you were going to pick that up. Yeah, I always been very spiritual and connected to, higher things. I love connecting to my heart and living a more wholesome life. So spirituality really attracted me. I started attending this church when I came to Canada. I immigrated from Brazil, got here when I was 13, and we went to a Brazilian church, and that was our friends and family and people that I could speak Portuguese to. Eventually really connected with God and the message, and felt like I needed to do this, full time and talk about it to others. So I became a pastor. It was a really long, arduous, not needed process, to be honest. I was met with a lot of resistance from leadership in the church for being a woman. And eventually felt really unhappy and disconnected there, and just like not where I needed to be anymore. And it took me a few years, but I eventually exited the church. And I am now way, way more spiritual than I am religious.
Interesting. So your last name, is that a Brazilian last name, or? Yeah.
So it's a Ukrainian last name.
That's what I thought.
Yeah.
I didn't want to guess just in case I was wrong, but.
Yes. My Brazilian name is Borges.
Okay. Yeah. So it's your husband's last name?
That's right.
Yeah. Okay. So 2 kids. And then you came here when you were 13 years old.
Yes.
You had, I'm guessing, did you go to university or college, or you went straight into the path of becoming a pastor?
So in order to become a pastor, I needed to get a BA. So I got a Bachelor of Arts in Religious Studies, and then I went to a 3-year master's degree in divinity. And that was part of the requirements to become a pastor.
I had no idea that you had requirements like that. Okay. Let's talk about your journey from there.
Yeah.
So you exit kind of the church, and then what led to you investing? Because I know a little bit about what you've done. You said Hamilton, you started there, multi-units. Tell me a bit about the start.
Yeah, so I come from really humble beginnings in Brazil. My mom, single mom, brought up my sister and I over by herself, and we lived very, very much an immigrant life. Started working at 14 and helping my mom as much as I could. Was out of the house by 18 and just had to figure my way through life. So financial abundance, financial literacy wasn't something that was taught or talked about. My mom had never invested, not even in the stock market. She would keep her money in GICs, and money was just never enough. And it would take a lot of hard work to make any. So fast forward to when I had left my life as a pastor and was kind of figuring my way what to do next. My mom went through a mental health crisis issue and moved in with me. And I had 2 tiny babies at the time. And I went, holy, what do I do now?
Yep.
Like, all of a sudden I have to take care not only of my kids, but also my mom. We're living paycheck to paycheck at that time. And I thought, this is not how you build wealth. Like, how do you build wealth? How do you go about doing that? So I started down my journey of figuring that out. Real estate came into my life really quickly after that. So I believe in the power of attraction and the universe. As I was searching for wealth, I started noticing wealth around me. And I had met this couple that were doing high-end flips, and they seemed like they had a lot of money. They weren't too much older than us. And I thought, there's wealth in real estate. So let me go learn more about that. I attended a 3-day workshop where somebody was teaching us how to do real estate, and something just clicked. And I thought, I can do this. Like, I know I can. That being said, we do have a construction background. My husband has been in construction for his whole life since college, and we had a construction business. So that made things a little simpler in that way, more confidence. That's really what got me started in real estate. We bought our very first deal in Hamilton. I bought it for $340,000, a single family home. We converted it into a legal fourplex. We refinanced at $700,000. 4 months later, took all our money out. We ended up selling the property 2 years later for $1.4 million. And then we took that money and went and did it again.
What year was that?
2018 was when I bought the first house.
Okay. First one, single family to fourplex.
Yes.
Yeah. So you refinanced it and then sold it 2 years later. All right. And what was the journey from there? Tell me a little bit more about like how you continue to grow and develop from there. And also one other thing I want to talk about, because I've had a few people recently kind of ask me questions about how I got started, and the assumption is often like, oh, did your parents invest? Like, how did you learn this, right? And that wasn't the case for me. My parents didn't invest in real estate. I kind of learned everything on my own, and I think it was the same for you. So it's interesting when people kind of assume that something was given to you or you had a lot of help in the beginning, but that doesn't have to be the case for a lot of people, right?
100%. And this is what I love about telling my story, because if I can inspire one person to, and I do, to like, hey, I can do this too. That's really the gift that I get from sharing that.
So tell me about the journey from there. Where do you go from that first?
It was stressful as hell, I have to say. The very first property was 8 months of hardly sleep. It was so new to me, and there was so much going on. The house needed so much work, way more than I could have predicted it. And I was doing it all myself. I was, from finding the house to managing the project to dealing with all the trades to, raising capital, finding investors, and dealing with the designer and figuring out how to fit 4 units, because it wasn't necessarily made to be that way. And it took me a couple months to figure out, but I really wanted that 4th unit in there. Then refinancing and all of that. Well, when we pulled our money out, I'm like, let's go do it again. So we went and got a second fourplex and did it again. Cash flow was pretty good at the end as well. And then we took that money and did it again. And then we bought 2 after that, and just kept repeating the model. We got up to 5 properties.
So you did you raised capital on your first deal?
I had no option.
Okay.
I had no capital. We had bought our very first home. It took us 7 years to save for down payment to buy a house. We bought a townhome in Mississauga. To be fair, that's actually my very first project, was putting a secondary unit in that townhome basement. I duplexed it, and that was my very first experience before the fourplex. And all of our money had gone into that house. Like we didn't have any money left.
Where did you learn to raise capital?
Necessity, I guess.
Yeah.
I had been in sales for a while. Like I worked for an organization. As I was doing this process, I was working for an organization doing sales. It's actually the same education company that I first went to. They were hiring and I applied, and I was selling the workshops that I went to where I decided to make a decision. So ultimately, I just talked to as many people as I could about what I was planning to do. And some people were interested, and we went to the next step and the next step. And we tried with a few different people. JV didn't work out. They changed their minds, but we were able to purchase the house together. It wasn't the best experience, I have to be honest. Like I had no experience. So it was a tough go. And at the end, when we refinanced that property, I bought her out.
Okay.
And we owned it 100%.
Yeah. Okay. Why don't we fast forward a little bit, because you developed your portfolio in Hamilton. What made you stop working there in that area and go to a different area?
Yeah, I was tired and burned out. It had been about 3.5 years of working nonstop and doing these projects. And I was doing everything, like I said, from beginning to all the way to the end, including property management. I don't know if you know Hamilton much.
Yeah,
it's not the easiest market to own properties in due to just, the profile of tenants there. Anyway, so it was just really taxing. And I thought, kind of tapped out my income and tapped out my time. And I thought, how do I scale from here? I have 20 units, but this has spent all my time here and I'm doing all these different things. How do I scale? So like the normal process I usually do, I'm like, how are other people doing this? And I started to just I had built such a network by that point to the more elderly, not elder, that's the wrong word, to the more experienced investors that I knew. And asking them, and I saw a common theme that most of them were investing in multifamily, larger apartment buildings. And I thought, okay, if that's where I'm going to end up anyways, so I might as well start learning now how to do this. And at that point, I had made a decision that I was going to shift focus to commercial real estate.
Okay. Not in Ontario, right? Was that the case?
I was pretty down with property management in Ontario, to be honest. And I was part of a mastermind group, a real estate mastermind group. And the topic had come up of landlord friendliness in a market called New Brunswick. And I went, there's landlord friendly states or provinces in Canada? Like, I didn't even know that was a thing. They're like, yeah. So it's really landlord friendly there. I'm like, tell me more. So ended up reaching out to a few people that I knew that were investing in that market that I'd heard, and just started asking a lot of questions. Called some realtors in the area, called, brokers, called some of my colleagues, and just gathering information, called some property managers. And then the more I looked into it, the more I'm like, I really kind of like this. I would love to go ahead and buy some property there. And that's when I met my business partner. He had already a few properties there, but hadn't done any apartment buildings. And we decided to go in together and get into the apartment building space. Okay.
And how's that working out?
I'm very grateful, to be honest, especially after this last year and 18 months where the market has shifted significantly and there's been so much loss. We've done well. We were able to refinance every single one of our buildings and pay all of our investors back this year, plus profits. They were so thankful and so happy because that hasn't been the case in a lot of their investments. We were able to scale, but not too quickly. We got I went from the 20 units to over 100 units in about 18 months because of the scale of multifamily. But we scaled enough. We had enough projects on the go that we paused. And for the last, again, about 12 months, we haven't bought anything new. We were just completing our final larger project on a 52 units building that we have. And the bigger the building, the better they're doing. My triplex, I have, out of those 4plex I mentioned, one was a triplex. We couldn't convert the attic. that's the one that's doing the worst.
Mm-hmm.
All the bigger the apartment buildings, the better they're doing right now.
Yeah. I don't know if you're familiar with Casey Wong. Have you ever heard of him?
No.
Okay. So he's an investor like locally here. Does a lot of stuff in like Kitchener and that sort of thing. And he owns apartment buildings, but he was saying how he had a triplex in Toronto and he ended up selling it and then bought, I think it was like a 22 unit student rental building. And he was just kind of running the numbers and comparing, like, if you just look at the appreciation of that one triplex and the total income generated, which was something like $5,500 a month, versus that building and how much it's appreciated in the last couple of years, and the total income generated by that building, you'll see how substantial of a difference there is in income between those two asset classes, and why owning a building long term is so much more beneficial and will just lead to way more cash flow for the investor, right? Depending on what you do with it. But yeah.
Yeah, 100%. That's my experience as well. Like one of our buildings makes over $100,000 a month in income. Obviously, lots of expenses, but just the scale of it, they're doing so much better. The other thing that I really like about multifamily is how you can control the valuation. There's certain things we can't control, as you know, like interest rates or which impact cap rates, but we can literally know exactly what we can get for an appraisal in any building just based on, first of all, our experience now, but it's a formula. It's so different than residential where it's like depends what the appraisal says and what the market has done or the last 3 properties around you has sold. It doesn't matter how much the building next door has sold for in the last 12 months. What it matters is how much your building is bringing in and how much expenses you have. So it's a really nice way to know what I'm getting into. It's a very conservative, math that we run and it keeps us in a good standing position.
Yeah. Can you break down some of the deals? So like what are you buying these apartment buildings for, or maybe the last one that you bought? What kind of cap rates are you seeing? How long is it taking to turn over units and to refinance?
Yeah, great question. So I'd say safely like 100,000 per unit. And then there's been variations in there. Like we've bought our 50 units, we bought for 85,000 a unit.
Are these downtown New Brunswick?
They're kind of all over the city, mostly in St. John.
Okay.
So we have some on the west end, some on the east end, some on the north end. I mean, it's a small town. So when I say that, they're like 7 minutes apart. What was that?
Sorry, are they good areas here that you're talking?
Some of them are better. I'd say B, B neighborhoods is where, and honestly, I could change my mind. I always reserve the right to change my mind. I really like working class areas and I like smaller towns too. We actually have a property, one of the fourplexes in Chatham here. I like the property 10,000 times more than any of my Hamilton properties. It's blue collar, good people. They pay their rent, it's great. So St. John is very similar, blue collar. It's about, 70,000 population there. And really we've quite enjoyed the tenant profile and what we can do with the building. So I'll give you a few examples. I can talk about the 52 units. That's not the latest building we've purchased, but it's the largest. So we purchased for $4.25 million.
Sorry, how many units was it?
52.
52 units, okay.
And this was back 2 years ago now. We're just about crossing the 2-year mark on it. Our project was to completely redo the units, and we have changing heating type, plumbing, electrical, HVAC, upgrades, everything in the unit. So we did significant renovations. We were able to also add 2 extra units. It was originally a 50 unit when we purchased. We were able to add 2 extra units, became 52. We're refinancing. We just signed a term sheet with TD last week, and we're refinancing at $12 million.
Okay.
Just over.
And this would be a conventional mortgage?
Yes.
So 25-year AM?
So this is CMHC.
Oh, it is. Okay.
Okay. So the golden goose of multifamily is CMHC. Have you done any CMHC?
I have. Yeah.
Obviously not easy with not so much the process, but the changes, the constant changes that they bring in. But so we started the building with a purchase plus improvements mortgage from RBC.
Okay.
And then we did the renovation. So we had to raise 25% of the purchase price, 25% of the construction cost. I raised $2.6 million for that deal because there was carrying costs and other fees and things. And then that was a 2-year project, and we just completed, as I mentioned, and got the term sheet in.
So you raised almost like half the value of the building.
Yeah.
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 Okay. I had a couple questions. First of all, purchase plus improvements. How does that work on the commercial side?
Yeah. So lots of learning lessons there for me. It's really helpful because otherwise we would have had to raise way more money. The interest rate was so much lower, right? Because it was regular to commercial rates, although not fixed. So it did go up in the midst of it. So the way it works is you come up with a down payment. Technically, what they're expecting is you're going to use that down payment first. So the first 25% of the construction cost comes from you, but the bank has that money. They will submit draws. We have a quantity surveyor that comes over after they've approved a budget from an approved contractor or somebody they are agreeing to do the project. They'll come over and they'll check that the work has been done up to a certain level. They'll write a report back to the bank, RBC in our case, and then they will approve and they will give us a check.
Is there a cost to doing that study?
Very cost. The monitor, yes, you pay him per hour.
Each time. Every time they come by,
Every
right?
time.
Yeah, okay.
So he writes us invoices for that.
Right. And from my understanding, I believe that the Purchase Plus Improvements program is a CMHC program. Is that right?
Not in this case. CMHC has their own,
Okay.
but this case was a conventional.
Okay. So you said RBC you started with?
That's correct, yeah.
And then, so you put the 25% down. What was the rental budget?
It was quite high, and it increased as well. By the time we were done with it, it was about the same price as the building.
Okay. So all in, you were looking at like 9 million roughly at the end?
Yeah, just under, yeah.
Yeah. So 9 million, were you able to get the whole, like improvements section financed?
We were, which was it was scary there for a moment because they changed regulations on us twice before the end of the project. Last year we found out that we actually had submitted the application for the first 2 buildings. These are 4 buildings side by side, totaling 52 units. We had separated title on the building so we could refinance the 2 buildings first. By the time we submitted to CMHC listed, we didn't fall into the new 2-year regulation that had come out. So they denied the file. And then we submitted again this year after the 2 years timeline. And the new regulation about, not being able to qualify fully on the energy efficiency side had come out.
Yep.
But we had gotten our application in on time
before
that took effect, thankfully.
Yep.
So that allows us to do like 95% loan to value on it, 50 years amortization.
Yeah. So, okay, just to kind of recap for anyone listening who might have lost us at some point, but it was 4.25 mil purchase.
Correct. Yes.
And then let's say like another 4 million in renovations, but you were able to take advantage of the Purchase Plus Improvements program where basically you pay for the renovations, but they send an auditor or somebody to go see what you've done. And then they give you the money back for the renovations and they just kind of add that to the mortgage, right?
Correct.
Yeah. So you're able to get the full $4 million renovation finance through the bank. And then you refinance for $12 million. The property was valued at $12 million.
So the gross loan is at $12 million. The property is valued just at near 13 million.
Right. Yeah. Okay. Yeah. And because you took advantage of CMHC's program, you were able to get a 95% loan to value, which is why you got 12 million out of the 13 million valuation.
That's correct. Yeah. And then it's sweet because we're able to pay all of our investors back for their original capital plus profits, and they get to still own their shares in the building for the next 5 years.
Yeah. Did you set this up as like a joint venture, or was it like a limited partnership type of thing?
I don't do joint ventures since the very first one.
Okay.
That was a joint, and I'm like, no more joint ventures for me.
Yeah.
So all of our buildings are on corporate shareholder structures, except this one is on an LPGP.
Okay. And do you structure, I mean, I don't know if you can get into the details here, but do you structure like a fixed return for your investors, or do they get an equity share?
So we do equity primarily, which is another, business strategy that now I'm very thankful for. As I've seen the market shift. So we do equity primarily. They will purchase equity in the buildings. There's no fixed return. There's projected returns. But one of the most exciting things to them is the ability to get their original capital back within a certain time frame. And this is the longest because this was the largest project that we've done. But usually investors get their funds back within 12 months, their original capital, and then they will continue to gain returns from cash flow and equity, passive appreciation, active and rental increases over the next 5 years.
Did you have any investors say they want out, like just buy me out, I'm good, I'm done?
That has never happened to me. And I do tell my investors, I'm like, if you ever need to, please just call me. I will try my very best because I never want you to be in a tough spot. When the rules changed last year, I felt like I needed to be really transparent with our investors. And when our first file got denied, that you may not get your money back in 2 years, and I need to let you know right away. So I had called every one of the investors in that building, which felt it was such tough conversations to be had. I'm like, just need to let you know. And I had at least one investor say, oh, like this is going to be really tough on us. And I immediately offered, I'm like, if you need to exit, please let me know. And I'll try my very best to replace you. Because I don't want to put you in a tough spot. It was so out of our control. But my investors are, if any of them call me, I will pick up the phone because that's their priority to me.
Yeah. Do you set an expectation of 2 years when you initially set these deals up, or do you tell them like it's 5 years? This is how long your money is going to be in.
Yeah, I want to try that more. That sounds even more appealing. And I like to move towards that direction. As of right now, we have been projecting like when the renovation is going to be completed and therefore when we can refinance. It's not always renovations though. We purchased a building at 24 units. We held it for 2 years as well. It was a 2-year timeline. And all we did was incremental rental increases and turnovers. And it also did really well when we just pulled up $1.3 million from that building and paid our investors back plus some nice profits.
And you set up your LPGP limited partnership, general partnership, in case somebody doesn't know what we're talking about. Do the general partners get 50% and then the rest is split between the LPs?
That's correct.
Yeah.
We've always done 50-50 so far.
And the GPs are putting some money in, I'm assuming, into the deal?
Nominal in most cases, just otherwise we can't really scale. But we carry the liability of the mortgage.
Personal guarantees?
Personal guarantees, 100% on our own. So as you know, GPLP, like the general partners, carry out the liability. And in all of our buildings as well, we don't bring in our investors unless we really have to. We mostly, and we have every time qualified on our own and carry the liability there.
How many limited partners did you have on that deal with the 52 units?
21.
21 partners. Wow. Okay. And you're responsible for raising all this capital? Like, is that what you do primarily?
That and asset management. But raising capital is a big portion of what I do.
So tell us a little bit about that. What are you doing? How are you getting 21 investors on board as let's say a relatively small company? You're not like a REIT or, one of these massive companies. Tell us about your process a little bit.
It's all about relationship building. So, really getting out there and connecting with people. I use obviously social media and different mediums for people to start to get to know me and who I am. I attend a lot of networking events. I participate in a lot of groups, and I build a lot of relationships. So during COVID, when the world shut down, everyone went on Zoom. I was on Zoom calls, for hours a day, raising capital, getting to know investors, building my list. And then it gets easier as people now know you, have been watching you, know what you've done. We've also built this amazing network of current investors, and they will always get first dibs at any of our projects. And it usually sells out within our current investor network because we build trust.
How many people would you say you have in your investor network?
in like let's say about 50 people.
50 people. These are people that like maybe you've done a deal with in the past, people that know you, that trust you. And when you have an opportunity, you present it to them first.
So 50, I'd say that's the people that have actively invested with us. Like when we talk about a larger network, it goes quite larger than that. I have 1,500 people on my like mail list that have in one way or another come into contact with us. And that's because I don't raise capital consistently. Like I said, we haven't really purchased anything the last 18 months, although I have raised capital for different types of projects and construction and different things. So I can only imagine how, more systemized I can make it if you're doing it, consistently.
Right. Can we go back to TD? Why TD? I've had a lot of people on the podcast. I don't know if anyone's ever mentioned using TD for a large commercial loan. If you want to kind of explain that to us.
It was surprising to me too, but they came with the better terms. We use a mortgage broker. We use Canada ICI, and honestly, they've been really great. They've been able to help us in every one of our transactions with the CMHC. So they shopped around and they had a couple of offers, and then we had not accepted, but said, let's go ahead with one of the offers. And then the next day they came back like, wait a minute, I just got something from TD and it's quite more attractive. So we're like, sure. So I had never heard either or had come into contact with the TD offering us any loans until now.
Right. And on a loan that size, I'm guessing the spread for the mortgage broker is going to be smaller, right? Like
we did negotiate it.
Yeah, you were able to negotiate. You had the power to do that, right?
Yes.
Because I did one on a fiveplex. It was a smaller deal, and it was like one point on top of the 5-year CMB.
Yes.
Again, for those listening who are maybe a little confused, but when you're getting a commercial loan through CMHC, they look at the 5-year bond yield, the Canadian bond yield, and then they add their spread. So that's the profit that the mortgage company is making, and that's how they come up with the rate. It's not like, fixed or variable rates that you see on the residential side. So your spread was probably a lot lower on your end, right?
We negotiated. I mean, it was, I called them up.
And you have the power to do that when you have a larger loan, because a lot of banks and lenders want that loan, right?
I know, exactly. You do have, that's the beauty of scale. It gives you so much leverage in everything. Like we're talking about construction. Listen, I need appliances for 52 units. What can you do? And so on and so forth. It just brings you that economy of scales, really allows you to.
Did you turn over all the units in
everything.
That building? Every single unit turned over?
Yeah.
And okay, so tell us a little bit about that, because it's obviously a lot easier. Like people in Ontario right now are thinking, how can you possibly turn over 52 units in 2 years? Like most people here are struggling to get any sort of turnover. So tell us about the differences between New Brunswick and Ontario when it comes to turnover.
Yeah. So I do want to say, and the disclaimer is, it is changing. It only lasts so long when it's, this friendly and open. But in our case, if you do give a tenant a notice that you will be doing significant renovations to a unit, they need to exit within 30 days.
Okay. Is that the same form? Is it an N13?
No.
It's a different form in New Brunswick?
Very different. Okay. They don't actually have an LTB there or the equivalent of an LTB. It's through the city, and there's a small department there.
Oh, cool.
It's a small town too. Yep. So everything is pretty, casual in comparison to Ontario.
Yep.
But we always give them 90 days notice, so you hand off the notices and they have to exit within 90 days. If they don't pay rent, same thing. You submit a notice and they have to be out within 30 days.
So you're submitting to like the city of St. John, let's say, instead of the landlord tenant board? Right. And then they would respond to you directly within 30, 60, 90 days, whatever it is.
Yes. The response, like you just submitting the form, there's no communication needed. There's no court hearing, nothing like that. You submit a form to say, you submit to the tenant, submit to the city to say, like, this is what's happening. Like we have, you haven't paid rent. This is your exit date. And when the exit date comes, you can go directly to the sheriff and have them get
Okay, what if
if the tenant doesn't leave.
What if the tenant's saying, no, I've paid? Then what happens? Is there a hearing?
Good question. We've never had that situation. The thing is, there is no, like, you know how here it's so tense? There's nothing like that there, because it doesn't even come to cross their mind not to leave the unit.
Right.
They know they have to go.
Yeah.
They know what the law is, and they exit.
So what was your strategy then? You take over this building. What's the first thing you do? You've got 50 units, you know, you have to turn over units, you know, you have to add the 2 additional units. Where do you start?
Yeah. So one of the really exciting things about this project was, as I had mentioned earlier, it's 4 buildings side by side on a cul-de-sac. And our strategy was, why don't we vacate 1 building at a time so that we're still earning income while the other buildings are being renovated? And that's really what we did. We ended up vacating 2 at a time, and then staggered the renovation starting dates. With the company, they came in and started like from demo and switching, you know, the heating type. We did energy audits for the CMHC portion of it, so we knew exactly what we needed to hit in terms of, you know, what equipments we're bringing in, what are the list of renovations we needed completed to get to the 95% loan to value. And yeah, and then went 1 unit at a time. They also leased really fast afterwards.
Yeah. What kind of rents are you getting out there? What was your unit mix anyway?
Yeah, so quite a bit of 2 bedrooms. I'd say about half 1 bedrooms. We have a few studios and a few 3 bedrooms.
Okay.
We'll get like $1,650 for between $1,450 to $1,650 for 2 bedroom there. A little bit higher on the 3 bedroom, and then about, you know, $1,400 for 1.
Right. And the studios?
The studios, I'd say like $1,100 to $1,200.
Okay, that's pretty comparable to the tertiary markets in Ontario.
That's right.
So that sounds like a really good project. Were you able to replicate that result with some of the other ones that you had as well? And
same result on every one of them. And this is what's been nice. We've been able to at least double the valuation of the buildings within 12 to 24 months in all the cases so far. Again, the market has shifted, mind you, interest rates going up, mortgages a bit more. We started purchasing when we were purchasing at 2%, you know, so that gave us some, you know, runway. But we've been able to double the valuation every time.
Do you get VTBs on some of the purchases?
We did get VTB on 1 purchase. It was a smaller building in 6 units, but it was really sexy. We got the 6 units for $222,000 was the purchase price.
Really? Okay.
And we got a 90%. It was actually a second mortgage financing, like vendor financing from the seller.
How bad was that property?
It was bad.
Yeah.
Yeah.
Yeah, makes sense.
Needed a lot of work, but you know, and my business partner lives there. He has a property management company. He also helps with a lot of the renovation maintenance stuff. We were able to turn it over really nice. We ended up only putting, you know, about 40 grand in. We did bring in some private money for the renovations, and then refinanced within a year at over $1 million.
Wow.
Yeah.
What's next for you?
Yeah, that's a good question. I think development is where things are going for me. I am currently doing a development project. We're applying to build 80 units, an 80-unit apartment building, like purpose-built rental out there in New Brunswick. Land is very affordable out there, and I'm learning what the process looks like for actually getting some of these projects through. And that's just opening doors for other projects. We've been looking at some other development projects there, and the purpose is to buy and hold, to build and hold in this case.
CMHC, I'm guessing, right?
Yes.
On that? Yeah. There's some really good programs, but I know that the rules have changed, so energy efficiency isn't as as good now in terms of the rule changes, but it's still making sense for you to do it, right? To build the 80 units?
So that's still like, we're still going through the like pro forma to see if it makes sense at the end of the day. I don't have proof of that just yet. The numbers are really tight. So we've just finishing a feasibility study. We've been in the process for about a year and a half. We have the concept. We're just like finalizing the costs of what we think everything is going to cost and see if it works. I mean, if it doesn't, then plan B.
Yeah, for sure. Cool. That sounds exciting, developing and going into that sector of things. I think we covered most of the stuff we want to talk about. Is there anything else you feel like we should talk about? You were talking a little bit about self-development earlier. Is that...
We need a whole podcast for that one.
Yeah.
Yeah. We can talk a little bit about the coaching. So
Sure.
From my experience, I just really got into speaking over the last, let's say, year and a bit. I really love being able to impact people from stage and share the message.
That's the pastor in you.
I know. See, I was training for this all along.
Yeah.
And finally started taking on some coaching students to teach what I've done to raise capital. We've raised over about $10 million, and just how do you go from not having any to being able to raise capital and ultimately successfully and doing it the right way.
Right. Yeah. How do people learn more about what you're offering and get in touch with you?
Yeah, if you go to my website at hello Ace Properties, at I can't talk. You're gonna edit this.
Yeah,
ace-properties.com is my website.
Yep.
And then on my IG and Facebook, it's Adriana Ostapenko. If you click on my link tree there, you will have a button to click and request more information about the coaching.
Yeah, we'll make sure to include your information as well in the show notes. But thank you for sharing your story, telling us a little bit about New Brunswick. I love hearing about where people are investing. It seems like, investing in Ontario isn't as popular these days, but it's great that you're able to do it successfully out there, and I look forward to staying in touch.
Yeah, you too. Thank you.
Thanks for listening to this episode. Your support is truly appreciated. And if you can share this with a friend or family member that might benefit from the information, remember, our goal is to motivate and inspire others to take action and to build wealth and to become well off. Enjoy the rest of your day.